Good morning and welcome to Economy and Market on BDTV, where we give you a comprehensive breakdown of activities and actions that are taking place in the economy as well as in the capital markets. And before we do that, we start with some business news making the rounds, starting with the federal government that is targeting a $300 million annual revenue from the export of Shea nuts. This is as the president has banned the export of raw shea nuts for 6 months. Nigeria, that is the world's largest producer of shea nuts, has announced a 6-month ban on raw shea nut exports in order to strengthen domestic processing and capture more value from the $6.5 billion global market. President Bola Tinubu approved the directive, which aimed to secure raw materials for local factory and generate at least $300 million annually in the short term. Vice President Kashim Shettima disclosed this decision at the presidential villa and said that Nigeria produces approximately 350,000 metric tons of shea yearly, yet earns less than 1% of global revenue, despite contributing nearly 40% of the global supply. The ban that is effective immediately and subject to review targets informal trade that drains over 90,000 metric tons annually and leave processors running at just 35 to 50% of installed capacity. By prioritizing value addition, the government is projecting a tenfold revenue increase by 2027 and access to new markets, including Brazil, within 3 months. The Agriculture Minister Abubakar Kyari stressed that Nigeria, with over 5 million hectares of shea trees, hold both comparative and absolute advantage in the industry. He noted that neighboring countries like Ghana, Burkina Faso, and Mali already restrict raw exports. With 90% of the pickers being women, the policy promises rural job creation, gender empowerment, and sustainable livelihood, while positioning Nigeria for a stronger share of the projected $9 billion global share market by 2030. We move on to the CBN that has fixed October 2025 as the deadline for banks to comply with the payment messaging standard. The Central Bank of Nigeria has directed all commercial banks, microfinance institutions, mobile money operators, and licensed payment providers to fully migrate to the ISO 20022 standard for payment messaging by October 31st, 2025. A circular signed by Rekia O. Yusuf, who is the Director of Payment System Supervision, mandates that all payment messages, domestic or international, comply with CBN and SWIFT specifications. Compliance validations begins on October 20, with institutions required to capture complete data fields, including payer, payee, merchant identifiers, and transaction metadata. Alongside this migration, the CBN introduced mandatory geotagging for all payment terminals to improve data accuracy and transparency. Terminals must feature geolocation services with double frequency GPS, registered with a payment terminal service aggregator, and integrate the National Central Switch Geolocation SDK. Only Android OS version 10 and above will be supported for compatibility. This directive requires geotagging of existing terminals within 60 days, while new terminals must be tagged before certification and activation. Location data captured at transaction initiation must be included in message payloads with strict adherence to merchant service classification codes. Terminals outside the PTSA routing will not be permitted to process payments, reinforcing CBN's push for a secure, standardized, and transparent financial infrastructure. Then we move on to PenCom, the National Pension Commission, that has recovered $4.57 billion from defaulting employers over 5 quarters. The National Pension Commission has recovered $4.57 billion from defaulting employers between the first quarter of 2024 and the first quarter of 2025. Reinforcing its commitment to safeguarding workers' retirement savings under Nigeria's contributory pension scheme. Mr. Oguche Aguda, DC. Mr. Oguche Aguda, the CEO of the Pension Fund Operators Association of Nigeria, PenUp, disclosed this in an interview with the News Agency of Nigeria on Tuesday in Lagos. noting that the sum comprised 2.12 billion in outstanding contributions and 2.45 billion in penalties imposed on 138 non-compliant employers. Aguda explained that the enforcement is evolving from episodic recoveries to proactive prevention, with tighter real-time monitoring, stiffer sanctions for chronic defaulters, and deeper employer education. In Q1 2025 alone, PenCom recovered 972.12 million in contributions and 381.88 million in penalties from 19 employers, averaging 71 million per employer, higher than Q1 2024 levels. He stressed that the goal is not just big recoveries, but fewer defaults and stronger pension compliance. Meanwhile, PenCom has directed pension fund administrators and custodians to halt equity contribution applications from 7 primary mortgage banks, including the FHA Mortgage Bank, Delta Trust Mortgage Bank, and Infinity Trust Mortgage Bank, over alleged guideline violations. The regulator reiterated that all employers with 3 or more workers must remit pensions and urged employees to report defaulters through PenCom's whistleblowing channels. Okay. Then we'll move on to FCMB that topped the volume yesterday as the Nigerian stock market has now recovered above 141,500. According to yesterday's trading data, the Nigerian stock market closed positive with an all-share index now advancing by 321 points to settle at 141,761. That's about 0.23% percentage point increase from the previous close of 141,439 points. This marks the third consecutive gain after last week's bearish run, bringing the year-to-date performance to 37.73%. Market capitalization rose to 89.7 trillion across 28,845 deals, edging closer to the 90 trillion milestone, while trading volume increased to 605 million shares from 591.2 million shares in the previous session. The top gainers were NCR and SFS Real Estate Investment Trust that rose nearly 10%. Then they were also followed by Berger, Beta Glass, and Cadbury. However, on the losing chart, we saw Legend Internet fall 10%, while Secure Electronic Tech, Curtix, UACN, and Deep Capital also posted sharp declines. In terms of trading activity, FCMB led with 89.2 million shares, followed by Veritas Capital, and Lafarge also dominated in terms of value with 1.6 billion naira in trades yesterday. Among the major players, we saw GTCO, UBS, Zenith, and Access Holdings all post modest gains, while First Holdco closed flat. International bureaus rose by 3%, but Lafarge also slipped by 0.41%. After the break, we return with the breakdown and the rundown from the market yesterday. Okay, let's take a look at how trading shaped up on the Nigerian exchange yesterday. So we start with the all-share index closing at 141,761.36 points, essentially gaining 321 points or 0.23%. That pushed the year-to-date returns to around 37.73%. The total traded volume yesterday was 605 million shares, and that with total traded value around 12.896 billion naira, approximately 12.9 billion naira. After yesterday's trade, market capitalization settled at 89.7 trillion naira. Then let's look at our gainers chart. We saw NCR, which is basically a company that powers ATMs across the country, rising by 10% to close at the share price of 11 naira 55 kobo. Then SFS Real Estate Investment Trust also went up by 9.99% to close at the share price of 301 naira 55 kobo. Berger Paint was also a significant gainer yesterday, It went up just above 9%, 9.06% basically, to close at the share price of 34 naira 90 kobo. Then Bitter Glass hitting a new record high as Bitter Glass has continued to maintain its rally in the market. Bitter Glass is now the top trading stock of the exchange this year. It gained 8.16% yesterday to close at the share price of 486 naira. Cadbury also was a significant gainer yesterday. It gained 8.04% to hit a share price of 62 naira and 50 kobo. In terms of our losers, on the flip side, Legend Internet shed 10% to close at the share price of 5 naira 40 kobo. Then Secure Electronic Technology also was down significantly yesterday as it went down by 9.26% to close at the share price of 98 kobo. Curtix Cables, Curtix PLC, the makers of the Curtix cables based in Onitsha, down by about, they were also down by close to 9%, down by 8.97% to hit a share price of 3 naira 55 kobo. UAC Nigeria, after the rallying of major part of August, the first 2 weeks in August, we saw UAC Nigeria rally significantly. It went down by 8.69% to close at the share price of 73 naira. Then Guinea Insurance also down by 8.05% to close at the share price of 1 naira 60 kobo. Then in terms of our most actively traded stocks, that's the highest traded stocks in terms of value and volume. The CFCMB 89 million shares in deals worth over 980 million naira. Veritas Capital Assurance 68.493 million shares in deals worth over 154 million naira. ICO Insurance also 36.153 million shares in deals worth over around 152.5 million naira. Then we see they are followed by Secure Electronic Technology, that was the top, that was a significant loser yesterday. 27 million shares over. In the world, around 27 million naira. There was significant sell-off of Secure Electronic Technology stocks yesterday. The Mutual Benefit Assurance also saw significant action with about 23 million of its shares traded yesterday in deals worth over 104, close to 105 million naira. Then we move on to the global markets yesterday as the US equities closed edged up higher across all the major indices. The Dow Jones Index added 0.3%, the S&P 500 added 0.41%, while the Nasdaq Composite climbed by 0.44% yesterday. Over in Asia, the sentiment was weaker as all the major indices now fell. Nikkei 225 fell nearly 1%, the Kospi dropped 0.95%, and the Hang Seng Index lost a whopping 1.18 percentage point yesterday. In Europe, the FTSE slipped by 0.60%. In France, it shed 1.7%. That's the CAC 40 shed 1.7%. And the DAX index of Germany slipped by 0.5%. Let's go to the currency space. We've not seen so much of movement in the currency space. We are still in the corridors of stability. Naira edged closer. The Naira closed at 1,536 naira to the dollar. The Naira gained against the euros 1,786 naira to the euros, and it gained also against the British pound 2,071 naira to the British pound. When we return, that's all we can take on the markets. But when we return, we're going to explore what happened in the NGX between July up until August, the first week of August. We're going to be talking about some of those actions and how investors, shareholders can key into the market at its current state. Stay with us. So we're going to be taking a look at some of the happenings in the market, especially with relation to most of the second half of the year. We're just in the second month of the second half, but this year, this half, we've seen quite a bit of dramatic movement in the market. First of all, in July, the All-Share Index delivered its most explosive monthly performance of the year, and probably the most explosive monthly performance since January 2024. In that month, the All-Share Index surged by 16.6%. There was a rush of optimism, and that rally did not stop there. By August 7, it continued up until August 7. The index powered through to the 146,000 mark. It's a mark that we were looking at the index looking to climb up to 150,000 mark, signaling something that would say, now the question is was it just an overheating phase, or it was more of a balanced rally? So now that's where we bring in Samuel Oyekanmi, a research associate at Norembaja Group, who is going to help us unpack some of that heat, some of the hype, and some of the potentials that still exist. Good to have you here with us, Samuel.
Yeah, good morning. Thanks for having me.
Yes. So basically, we want to just we'll start with, so between July 1, August 7, we saw between July 1 and August 7, we saw the all share index rally over 22%. It went from, at least the market closed June 30 around 119,000 points, almost 120,000 points. But by August 7, we see that 146,000 points. So was that just like a textbook overheating, or is it that there's still some upside ahead, basically?
Yeah, I think it was an interesting move, right? The
Yes.
market saw a daily consecutive gain for I think about 26 days, right? Before we saw some corrections or some profit taking activity around 7th or 8th of August. And that's quite interesting because I don't think we've seen that in over 10 to 15 years, right, in the equity market. So it was interesting, and you would say it was in line with some of the things that has happened again in the Nigerian economy as a whole. Don't forget that we're coming from an era where there was FX liberalization, which allowed for foreign players to be able to easily come into the market and exit when they need to. That also had enabled some level of participation, both from FPIs and then from domestic players in the equities market. Then we're also coming from an era where a number of companies had recorded losses, right, from the FX devaluation 2 years ago, the likes of consumer goods companies, and some of which in the telecommunications industry also recorded significant losses on the back of huge FX devaluation loss. But of course, 2025, the anticipation was that many of these companies would start seeing a correction in terms of their books, right, and then would probably churn out positive numbers. And we saw that, right? And what happened was that a number of investors positioned themselves in anticipation of the release of those results that then in July. And that drove significant rally in the equity markets. And you could see just from the fact that the likes of consumer goods, banking, telecommunications stocks were the major drivers. And then insurance also, of course, with the signing of the bill by the president a couple of weeks ago, saw that also translated into upside gains, right, in the stock market. I don't think it was overrated. Of course, some stocks enjoyed from the fact that counterparts in some of those sectoral indices did well, and then because for the stocks that probably interested in, maybe it was overpriced, and then they started buying other stocks that are associated with that. So there's always that effect of fear of missing out playing out in the market. But I think generally the bullish trend was anticipated in line with some of these factors that I mentioned.
Before we came on the show, you told me something that you were not going to give any buy recommendations. You said something like that. But now let me ask this question. A little bit of market correction has happened. We've seen the index move from that all-time high of 146,500 points, 146,500 points, to just around, now it's, as at yesterday, 141,700 points. In recent days it went down to 140,000 before we started seeing a backtrack even onto the 141,000. So when you look at the market, do you think that there are still some entry points in specific sector, or do you think that the rally that we've seen so far has really priced in all of the upsides? You talked about, now you just mentioned the fact that when a lot of actions, when a lot of corporate actions kicked in 2024, it was expected that the market corrections were going to happen that would lead us to the point of upsides in many companies. So do you think that the rally has priced in all of that upsides, or there are still some entry points in particular sectors?
Right. I think there's always an opportunity for gain in the market. It just depends on the kind of investor that you are. If you're someone who is looking the long end, or you're someone who is playing the short game, someone who just wants to actively trade and then gain from market movement. If you're someone who does that, well, you can always find those opportunities in the market. If it's the long run, then I think you have no problem. Pretty much any solid stock does well. If you look at what has happened so far this year, the NGX 30 has pretty much mirrored the ASI broad performance. And what that tells you is that a larger part of the movement in the ASI, that 37% that we've seen so far this year, has been largely driven by the NGX 30, which has done about 35.5%. The rest has been probably low cap stocks and all that. What that tells you is that the solid stocks has really driven the market. But then again, you break that the performance of the ASI into different sectors. There are still some sectors that have not necessarily done well. A typical example is the oil and gas industry. Has pretty much been on the red
Yes.
so far this year, less than a bit over 12% deficit. What that tells you is that there are some stocks in that region that could also be underpriced at the point in time, that you can also use that as an opportunity to enter. Again, even across those other industries that have also done well, there are still some specific stocks that still present some good entry positions, right? And then again, generally, when you look at the market, dividend paying stock, oftentimes what history has showed us is that they tend to do well year in, year out. So there are still opportunities for investors to want to look at some of these sectors, as I said.
Okay. The question I wanted to ask was, now the next question I wanted to ask was based on that oil and gas sector, especially. Now we know that most of the rally, like you said, the all share index has majorly mirrored the NGX 30. Those are like the most capitalized stocks. So we've seen a lot of the rally come from industrialized goods, banking, consumer goods. Yes, it contributed significantly, but majorly industrial goods, telecoms. That's another point. Telecoms has also helped, especially MTN, helped gains in the market. But for the oil and gas stocks, we've not seen any significant budge. In fact, through all of that rally that we saw between July to August, the oil and gas sector just gained around less than 2%. So are you saying, do you think that sector basically offers compelling value? Now let's look at it from this point of, there are upstream companies there and there are downstream companies there. So let's just take us through it, especially considering the fact that maybe on the upstream side and on the downstream side, the stories may be different. What can you say about that sector especially?
Yeah, I think the oil and gas sector or industry as a whole is an interesting one. Don't forget, when you look at it again, as you said, from the upstream side, you want to look at in the international market. What is happening in the international crude oil market? Is it favorable to the companies in there? And maybe that's why we've not really seen so much rally in that area, because crude oil prices have not particularly been high in
Yeah.
recent times. And as a result of that, companies who are exposed to oil or crude exploration would probably not do so well at this point in time. But not,
Okay.
not to say that's still not good stocks. Then again, you come to midstream and downstream. Don't forget that we have Dangote Refinery now playing in that space, right? There is a lot of silence around the mid and downstream industry right now, because there's an expectation that Dangote Refinery could be listed on the NGX at any point in time. What that does is that it brings significant competition into the market, and that could be downsides to other guys who are playing in that industry. So, of course, investors will be looking at, if Dangote Refinery is coming into the market, I don't think I want to buy stocks in these other stocks, right? Because of that level of competition, and then the firepower that the likes of Dangote Refinery will bring in into the market. But that being said, the entry or non-entry of Dangote Refinery in the market still means that some of these stocks are good entry positions, right? Looking at the oil and gas sector as a whole in the broad economy, it looks like it's been growing in recent quarters based on data from the MBS, right? And what that suggests for you is that things are shaping up better in that industry. And if we're able to have a well, which we do have to an extent, right, regulated prices in terms of petrol prices, if we're able to tighten all that together, I think some of these companies could still continue doing well in terms of their profitability, and that could also offer some form of upside for those who are looking to explore oil and gas industry in terms of stock buying.
Okay. So now I want to move on to the foreign portfolio investors. So we've seen that double in the first 7 months of the year. We've seen a lot of FPIs come into the market. It's now around 1.3 trillion for this year. Now, how crucial are these inflows for stabilizing the market, and do they risk creating vulnerabilities if they reverse?
Well, so for me, I would not think about reversing right now, because looking at the market, what we have also seen is that the more entry that we are seeing from foreign portfolio investment, the more exit we are also seeing. So it means that that free flow of FX that the CBN reform brought about last year or 2 years ago has made it easy for FPIs to be able to come into the equities market and then leave at will at any point they want to do. And that has not really caused any form of shock in the market. So right now, I think having them participate actively in the market is good. So far, the first 7 months of the year, they've contributed about 21% to the general market. That's compared to about 19 from last year. I think that's quite significant. But then again, I would like that we look at that number is actually a function of both entry and exit. And those exits have not been significant enough to cause any form of damage in the market. I think what I would find interesting is the fact that locally we are having a lot more institutional and retail players participating in the equities market, and that has also driven significant increase in terms of the market. I think almost every day, at least one Nigerian reaches out to an investment advisor to ask, what stock should I buy? It means that we are having more Nigerians being interested in participating in the equity market. And I think that's good. So where we have FPI is good for FX stabilization in terms of the general macro. But for the stock market, I think we are having a lot more domestic in terms of retail and institutional players participating actively. That's good. The FBI is also participating is also good for the market. But then again, I don't think there's any risk at this point in time, because even right now, as they are coming in, they are also moving out at will, and that hasn't had any form of shocks on the market.
Okay. Now we've talked about the fact that you just made mention of the fact that a lot more Nigerians are now paying attention to this market and are paying attention to what's going on there. The one thing that is there that we can agree upon is the fact that in Nigeria, a market rally does not necessarily translate into economic development. Well, so you can't really track the performance of Nigeria's economy, Nigeria specifically, on the performance of the stock market. What policy steps can we use to translate, to bring a synergy between these two things together?
Yeah, so generally, right, you would always say that the stock market is a barometer for measuring the performance of an economy. And I think, rather compared to what you said, I think the NGX mirrors to a large extent how the economy is perceived. But of course, I agree that we need to do a lot more to ensure that that gain that we are seeing in the equity market translates into broader growth in terms of the economy. And one of the things we need to do right now, I think the number of companies we have listed in the NGX is around the region of 150, 149 to 152 companies or thereabouts. And when you again break that down, you realize that about top 20 of that market accounts for pretty much around 80% of the entire market. It tells you that the market, as large as it might look, is controlled by few. So what we need to do is to ensure that we have a lot more businesses have the power or the opportunity to be able to list on the market. And then beyond listing, because what listing the market does for companies is that it helps them to raise capital. Right now, the cost of raising debt capital for businesses is very high. MPR is 27.5, which means loans in a bank or commercial paper will be significantly high. So, but businesses being able to come into the capital market and raise equity capital could be some form of good things for them, right? And if you have businesses able to raise as much capital, that drives expansionary activity. And at the end of the day, it reflects on the broad economic growth in terms of the general Nigerian economy. So I think if the regulator, right, the government, the NGX, the SEC, the whole pile of them come together to ensure that the market is placed in such a way that companies who are low caps, SMEs, have also some level of equal opportunity to be able to list in the market, allows them to be able to raise capital, which also drives expansionary activity. I think that's also going to be good. That way we can see the performance in the equity market rub off on the broad economy. And that's why it looks like there's still some huge dichotomy between the performance of the equity market and then the Nigerian economy.
Okay. Now I want to throw in this question. You made the mention about the fact that based on what you said around raising capital, one reality there is that over the past since 2020, from last year till this year, we've seen a lot more capital raises on the equities market, considering the fact that debt capital is becoming prohibitively expensive. We've seen more lower cap companies trying to raise 15 billion, some trying to raise, but basically we've seen a surge in the amount of volume of capital being raised in the market. But the question I want to ask now, what steps can be put in place to help some of these lower cap companies list on the market? It's like the barrier to entry on the NGX is already placed at a point where it's for at least is for the maybe top 10% of companies that exist in Nigeria. Is there a way they can lower this barrier to entry?
Yeah, I think there needs to be a balance, right? Yes, the barrier to entry seems to be high. And then to be fair on the NGX, I think is also needed, right? Because if you're going to bring your company, you're going to list your company on the NGX, it means that the NGX is somehow vouching that this company is right, that and the public can invest in those companies. So of course, there needs to be some huge level of due diligence, one of which includes things like around corporate governance, right? So for companies to be able to list, they just need to tick some boxes, right? And that also speaks to businesses generally, even beyond regulations, right? Because regulations we do there, companies also need to be able to ensure that due diligence are being met, right? Things around your corporate governance, how you do your business, how well are you guys accountable to your shareholders. I think those are a number of things that companies who would like to list on the NGX need to do to be able to do that. While on the NGX part, I think it's just about more publicity, education around the benefits of companies listing on the NGX. I think one of the things around financing is that businesses are often scared to raise equity finance again, because what it means is that you're also bringing other people to be able to look into your books. They now have the right to look into your books. They now have the right to share from your profit. And somehow, from a Nigerian point of view, I think we're used to the one man business type structure, and I think that's a huge one. So of course, before we can get to that point, there needs to be some reorientation around businesses and why equity capital is not such a bad thing. While doing that, businesses who would also like to list also need to do their part in terms of ensuring that corporate governance is tight, how they do their books are also tight. That way, I don't really think there will be an hindrance for them to be able to list in the market or any other market as a matter of fact.
Okay, so thank you so much for your time on the show this morning, Samuel Oyekanmi. Thank you so much for talking to us.
You're welcome. Thanks for having me.
Yes. So I just had Samuel Oyekanmi, who is the research associate at Northern Badger, speak to us on the just seen rally. So it's a question of is it a balanced rally, or was it just a case of an overheated market? And he gave us quite a bit of insight. He gave us quite a bit of understanding of what has gone on. So thank you for sticking with us on Economy and Markets this morning on BDTV. We'll see you again on Friday.